March 15, 2021 is a historic day for the crowdfunding community. Listen to experts in equity crowdfunding, both on the project side and the regulatory side, unpack what this means for investors and startups. Hear the reactions and analysis behind the rule amendments to Reg CF and what are the next opportunities now that this milestone has been checked off. In this episode of our Crowdcreate Mastermind Series, you'll learn all this directly from the leaders in crowdfunding. Welcome, everyone. Thank you for joining our Crowdcreate Mastermind. We're focusing on crowdfunding today, and we have a lot of distinguished guests here. And the purpose of this mastermind is really to share the knowledge that everyone brings to the table. We believe in the wisdom of the crowds. All of these thought leaders here are experts in their own industry, and they're here to share their knowledge, their insights with the community. So we're going to go around. Everyone's going to share a bit about themselves, and then we'll go into a discussion. We do have attendees joining. We're expecting around 35. And if anybody has a question, please type it out, and then the panelists can type their answer here. So let's go ahead and kick things off. Jason, if you can just do a quick introduction, you're first. You're muted.
All right.
Jason.
Hey guys, can you hear me okay?
Yep.
How are you?
Good.
All right. Made through the first technical difficulty there. Ivan, Jeffrey, thanks for having me. Pleasure to be with you guys talking about the new Reg CF and Reg A+ ordinance. March 15th is here. We've been waiting for the day. I run an investor acquisition marketing agency here in Los Angeles, California. Been friends with the Crowdcreate team for years now, big fans of everything that they do, and really look at this cohort that's on this call as some of the thought leaders that are going to be pioneering the space for years to follow. So it's a privilege to be here with everyone. Looking forward to sharing how these new rules affect our marketing campaigns, how they impact what we're doing for issuers, and therefore the success on all sides of the table, including investors and what's now going to be available to them. So again, it's a privilege to be here with everyone today and have a lot to share.
Thank you, Jason. And yep, it's always good to see and chat with you. Ethan, we'll go to you next.
Sure. Eitan Butler here. I'm the chairman at Dalmore Group. We are a FINRA and STC registered broker-dealer, founded in 2005. We're based in New York, and we're active in all 50 states. We specialize in helping companies raise capital online at scale through regulations A, CF, and D. And over the last year and a half, we've been fortunate enough to be the broker-dealer on over 100 Reg A offerings. And we are quite active in the Reg CF space as well. Over that period of time, we've observed what has been working well and what hasn't been working so well. And we try to share this with new issuers. And obviously, we're very excited about today, about being with all of you on this panel, about the increase in amount of capital that issuers are able to raise via Reg CF and Reg A. So it's thrilled to be here with you all.
Thank you, Ethan. And it's literally a special day for all of us because it's March 15th, and that's actually why we wanted today to be the day. But let's go to you, Brian.
All right, Brian Bodick out of Chicago. Guys, excited to be here. I'm with the Next Unicorn, one of the founders. Started in 2017. We are a marketing-focused series platform that's spotlighting socially impactful and high-growth startups that are raising capital via equity crowdfunding. We're launching soon on a network series that you guys are aware of, and working with the portals right now just to kind of give them additional reach and exposure. Some of the companies that they're working with, obviously, they're always looking for additional reach and exposure. So we are vendor and portal agnostic, and we are essentially going to be interviewing high growth startups and telling their stories. So we have one of the co-founders, one of the executive producers of Shark Tank early on, that's part of our team, some wonderful influencers and analysts, and we're just excited to be here working with all you.
Thank you, Brian. Yeah, it's exciting times. Pedro, how about you?
Was that, were you referring to me?
Pedro, yeah.
Pedro, yes.
Pedro.
Thank you, Ivan, and everyone from the Crowdcreate team for having me. My name is Pedro Moore, co-founder of Fun and Fuel, and this is a platform focused on fractional investing into franchises, crowdfunding for franchises exclusively, helping that community be able to raise capital and scale their operations.
Thank you. I apologize. I grew up near San Pedro, so every time I see Pedro, I think of Pedro.
No worries.
All right, Chris, let's hear an intro from you.
Hey guys, glad to be here. I'm Chris Rowley. I'm CEO and founder of Harvest Returns. We're an equity crowdfunding platform founded in 2016 to bring together investors with farmers and ranchers to connect them closer to their food system and provide them with assets that they can't normally invest in. Our goal was to streamline investments in agriculture and provide this asset class that is not normally thought of when people are looking to diversify their portfolios. And what I'm really excited about is since COVID happened, we've seen a lot more people concerned about where their food comes from and how it's produced, and an uptick in investments. Thanks.
And we're seeing it across the entire industry too. And even on the food side, people are looking at just more organic, locally sourced alternatives. But excited to unpack that. Let's go to you, James.
Yeah, hey, my name's James Joseph. I usually go by JB normally. Yeah, I'm the president and one of the co-founders of Crowdlustro. We're an aggregation and research platform for all equity CF deals in the United States for now. We or scrape information from all the platforms out there. I think we're floating around 65 right now. And we also have tools on our site that allow users to come in and, while they're searching for deals, they're able to also write and review kind of Wall Street style diligence reports that our users draft for various offerings. So we're just trying to, in short, kind of tidy up and organize crowdfunding and make this asset class a little safer for both rookie and or I should say novice and experienced veteran investors alike. So yeah, check us out.
Today really opens the window to a lot of these new investors coming in, the bigger check sizes. So yeah, Jay Martin, let's hear from you.
Yeah, Marty Tate. That sounds very official, Jay Martin. I'm a securities attorney, crowdfunding attorney based out of Salt Lake City. I've been involved in crowdfunding since the very beginning, pre-Jobs Act. And I represent, dozens of platforms, issuers, service providers in this space, and have been very active in the space since the beginning.
All right, thank you, Marty. So just to remind everyone, thank you for your introductions. If anybody has anything to say or any comments, please use your raise your hand feature inside of Zoom that we can keep the conversation rolling. But Marty, I think you'd be the great person to unpack this today, and not only that, but our first topic. And what happened today, March 15th. Everybody's been watching this for a very long time, and it finally happened. Interesting, at our last mastermind, we had Ruth, one of the writers of the original Reg CF, on one of our masterminds. And it's really interesting to see where it's evolved. But yeah, first topic, let's talk about what happened today. Marty, you want to kick it off? Oh, you're muted.
There we go. Yeah, so today there were some proposed amendments to Reg CF and Reg A to the Jobs Act that were proposed. Basically, I think it was last spring. There was comments that a lot of people wrote in, including ourselves, wrote in comments and things that they'd like to see changed. The rules were changes were approved, and basically today is the day that they go into effect. So there's a number of big changes. One of the things that people are excited about is just increase in the limits. So Reg CF, which previously was limited to a million, basically 1,070,000, is now 5 million, which is a big deal. And Reg A Plus, which was previously limited to 50 million, is now 75 million. In addition to those changes, there's some changes regarding what issuers can say and platforms can say prior to an offering for Reg CF, basically testing the waters, allowing you to go out and get indications of interest, which is something that was allowed for Reg A, but not Reg CF. So that's a big change. Another change is the use of special purpose entities for these types of investments. If issuers want to silo investors into an SPV, that's now permissible. So those are kind of the highlighted changes that go into effect today. So things that I think are pretty game changing for sure.
Yeah, I'd love to hear from the other panelists what they think, especially since many of you are on the other side. I know that the test your waters concept has been huge, especially people coming from the rewards crowdfunding side, where that was a big model. Yeah, anybody have any comments on this?
Hi, I would say just two things. One, about the test your waters for the CF side, I think is great, just as general concept for reducing risk for a startup founder, right? To kind of literally test the waters, because when you build an MVP, prior to that, you basically had to build everything out, and that's a lot of money that you have to shell out before you really have the confidence that you have a market for it. So I think that's a good value add by them adding that feature. And then the other feature with the special purpose vehicle, which I think is a nice complement, it just helps with, having a better clean cap table. And so I think that's just a better complement just for deal structure and just kind of going forward. So I'm definitely in favor of that.
Yeah, and on the marketing side, Test the Waters is a complete game changer. As you were mentioning there, Ivan, reward-based crowdfunding, it all comes down to the pre-launch, building up a large enough audience. So the first day of your campaign, you're hitting a third of your goal or more, setting you up to compound into your external goal, hopefully quicker, and internal goal within 30 days. That has not fully been available, compliant. Even audience building could be looked at as priming the market for Reg CF. Historically, those days are now over, and where we've been doing test the waters for Reg A Plus campaigns, putting on reservations, audience building, it lays out the entire strategy for a powerful first day, a powerful first week, first month of the campaign offering. Now that we're looking at up to $5 million on the Reg CF cap, attracting much larger organizations. We're speaking with groups of $20, $25 million valuations on a daily basis right now. Where in the past, 5 million may have been the average size company offering $1 million on a Reg CF 1.07, and basically told to stop once their campaign was really working, really picking up momentum. Now we're going to be able to continue. I'm picturing and planning on campaigns that come out of the gate very quickly with 7 figures, $1 million more in their round, and then using that validation to bring on more retail and accredited investors to stack to higher and higher levels throughout the process. Also allows you to test marketing channels and see what's working for reservations. If Facebook advertising traffic or LinkedIn outreach or whatever it may be on the content or organic marketing side is giving you the most validation, the most traction. If they're whichever are the most valuable, you can then scale once your campaign's live. So again, for marketing, this has been something we've been waiting for a long time. And as we've seen over the past 12 months with a higher success rate, more investors in the market, better quality deals, we're only anticipating that to amplify drastically in the month, year, and longer timelines to follow.
Yeah, I'd just like to echo some of those comments. I agree. I think Test the Waters is going to be, a big game changer here. Echoing some of Pedro's thoughts there, and having gone through this recently myself. The costs for getting all the regulatory and legal work prepped for these offerings can be a little needless, and the test the water campaigns are going to be a good way of kind of navigating around that issue. I think another interesting aspect that I'm personally curious, and this may be the kind of JD and me speaking, right, is how the platforms are kind of going to kind of navigate the regulatory waters surrounding that test the waters rules, right? It'll be interesting to see how that transition works from a test the water campaign, and all these interested parties that, depending on the platform, may or may not be kind of giving, I guess, indications of interest, right? And doing light commits for investments, how that transitions and how they kind of handle the regulatory waters that surround that to, the actual beginning of the campaign. Do those investors get immediately carried over? What documents are executed? Anyway, I'm going down a bit of a rabbit hole. But yeah, no, test the water should be great, and we're really excited about it over at CrowdLustro. I think it'll be nice to see more folks. I guess this is on the opposite end of the spectrum, right? We're expecting to see more senior and mature entities coming to raise capital, outside of that Reg A, Reg A plus realm and into CF. It'll be interesting to see what kind of smaller companies or similarly sized companies is what we've seen recently who utilize test the waters to get that initial validation and then actually pull the trigger on launching their CF campaign. So it'll be interesting to see how it affects the market overall. Definitely.
Yeah, just to see, just from an entrepreneur perspective, it also opens what it could be used for crowdfunding in the life cycle of a business, because now you can test water, but it also opens it up to, with the 5 million, now companies can come in on a lot of companies that we talk to, they're not interested in a $1 million raise. They see a need for more. And now that you can actually do up to 5, it really opens up, a lot of speakers we've had kind of tell this story of how crowdfunding should be a part of every single startup, right? So now crowdfunding is just step 2 or maybe step 3 in a life cycle of a business, and just redefining what that means. Had any comments on, let's say, where crowdfunding is going to shift to become now that it's changed? Let me know if anybody wants to unpack that one.
I think to your point. Oh, go ahead, Pedro.
Oh, sorry. I was just going to say I'm not 100% sure, but my gut is saying that as more and more people become comfortable with just investing online, I think it's going to become more of a standard of a capital source as part of the capital market, and where people now have additional options. And I even see it as for other sectors of, the small business sector, of people who don't really have a lot of options for capital, be an opportunity, right? Or just another option. For some sectors, banks are really the sole option of capital, unless you just have that rich uncle. And so I think just as people become more and more comfortable, more aware, it's going to become more and more of a standard, which I think is also going to help with even better deal flow. More businesses, the quality deal businesses will start coming along. I think today on Republic too, they probably did this purposely. Gumroad is a big brand in the tech ecosystem, strong company, have a lot of I don't know how many investors invested in them, but is well known in the tech ecosystem, and now they are raising their $5 million round through Republic, and so I think that's just a good staple of the saying, like, hey, it's okay to go through a portal to raise your funding.
Yeah, and I'll add on to that with the quality of deal flow. I completely agree. I think that especially now it's at 5 million, the quality is going to be there, and then you raise every year. You could raise every year. So think about all the companies that are going to start coming in and realizing if they have really good campaigns, you don't just stop raising after 5 million, right? You could effectively in a year raise another 5 million. And so I think that the quality is just going to go up. More and more people are going to turn to it, and yeah, it's an exciting time. Definitely over the next year, it's going to continue to go fast. We're seeing that point, just the conversations that we're having.
I just want to say, to your point, Brian, I was on a Clubhouse thing today, and the CEO, he was basically talking about his launch. He said that exactly, that on the sole reason why he now not that he didn't think about it before, but the sole reason why he moving forward today is because it went to 5 million. You know, and it's more attractive for him to really do this. And like you said, next year he can go for another 5, right? If he wanted to.
Yeah.
So absolutely.
The other area where I think you're going to see, where I think you'll see moves to real estate. We've talked a lot of typically real estate people in that asset class have avoided Reg CF just because the $1 million is too low. But I think now that, you know, if you can go up to 5 million, that's well within a sweet spot for different real estate projects. I'd be interested to know what Chris has to say about that, and if that's something that they, you know, they're a Reg D platform, but if that's something that they're going to look into.
Yeah, I think that these rules are positive. Full disclosure, Marty's our attorney. So if anybody's looking for a great securities attorney, reach out to Marty. So for platforms like ours that have been Reg D, and we've kind of been avoiding the jump to Reg CF for a number of reasons, these new rules might help us to kind of get across that barrier and move towards that model where we can expand our crowd. We can touch the retail investors, because that's part of our, you know, what we see as our corporate mission is bringing more people closer to agriculture and you know, allowing people to come in at $200, $500 investment level would be a game changer for us.
Yeah, even on the smaller check sizes too. And actually, Marty, you make a really good point about real estate, and it's a good opportunity because previously it didn't make any sense. So I also want to take the angle. Everybody here is a thought leader and an expert in their industry. Is there anything the community can help you? Almost looking forward. Everybody says now it's going to speed up and accelerate. You know, where can we all help each other? We're all here on our platform. I know Clubhouse is the popular one, but right now we're all here on Zoom. How can we help each other and take the crowdfunding industry to that next level?
I think we you know, all need to do our part. Venues like what you've got here is great to educate the public on crowdfunding. When you look back a few weeks ago at the Robinhood and all the GameStop, there's still there's a number of you know, millennial Generation Z investors that are onto these sorts of platforms, but I think a wide swath of the public doesn't even know that it's an option to invest, especially into alternative asset classes. So yeah, the more we can get the word out that it is a great way, a safe way to invest, and then on the other side, get more and more companies to consider Reg CF or Reg D, whatever regulation for crowdfunding to raise their initial rounds is a huge game changer for all these the entire fundraising ecosphere.
I agree. I think sharing information amongst each other is a big one. Just, you know, I'm always curious to see what other portals are popping up, because I know now with the rules changing, more and more companies are getting into the space. Is there more niche portals out there focusing on certain types of equity crowdfunding? You know, just sharing that information, I think, is going to be key with all the thought leaders. Just staying on top of the industry and how it's changing and how it's evolving and growing.
I think, you know, I can chime on that. You know, I mean, I personally have seen more CF portals popping up recently, and not just recently, you know, over the past year and a half, where they are targeting those more niche kind of markets, right? I mean, you can look at Mainvest, for instance. I mean, they almost exclusively do brick and mortar restaurants and breweries and the like, right? Or you look at Fundana, right? I mean, which are primarily cannabis related investments, you know, and it is a good question as to, you know, what direction the industry is going to travel. This is one question we debate over at CrowdLustro regularly, right? Because, you know, there are a few paths that I think the overall market or marketplace can go down at this point. And, you know, it'll be curious to see whether or not there are some major players out there that end up consolidating a lot of the platforms. I think that'll happen to an extent. But I also feel as though we're going to see more of these niche platforms pop up, right? You know, I mean, if you want to kind of cross the aisle here, so to speak, If you look at Republic's recent acquisition of Fig, right? Fig was an interesting example of not an equity CF fundraising platform that primarily targets the video game industry, right? So it will be curious to see which direction or directions the marketplace goes. And then on top of that, how the public generally responds to that, right? I mean, are we going to see, this group of people or this group of investors out of the entire, group of investors that participate in equity crowdfunding, are we going to see this group of investors kind of gravitate towards platforms A, B, and C, this group of investors, DEF, XYZ, et cetera. And I think it's just too hard to say at this point. I mean, the market is incredibly fragmented. And then on top of that, the quality of these issuers can really vary pretty wildly. So, this is all kind of circling back to the big point I kind of harp on, which is, I think equity crowdfunding needs to be, I think the term policed is extreme, but, I think the major issue with crowdfunding right now is that there's no due diligence or research infrastructure available to these investors, right? And all too often, it was less of an issue and is less of an issue in donation-based crowdfunding. But it gets a little more dangerous when you start talking, okay, I'll invest $1,000 or $2,000 or $5,000, which we see a fair amount of people do, I think, at all platforms. But they're having no idea where that money's going, right? I mean, for donation-based crowdfunding, it's a little more lighthearted. I'm getting some perks, some gifts and whatnot, but and the understanding that it's donation-based. But I think there just needs to be a slightly higher level of scrutiny for some of these issuers. So we'll see. I don't know. I may have gotten down a bit of a rabbit hole there, but
James, those are great points, and let's unpack that as a group. So I want to hear, some of you represent other platforms, but what are those niches you're seeing, and how can we? Yeah, there's no real standard. We see it falling apart into platforms sometimes because the regulation and the rules are just falling. They're not moving as quickly.
Yeah, they're definitely, yeah.
Anybody have any comments to that?
I think issuers need to realize that they have a couple different options now. They have what we call over 60 marketplace-oriented platforms where you're listed amongst a number of others. And then there's what Dalmore focuses on, and our direct CF platform focuses on is setting the issuer up with their own independent offering page that's not linked in any way to any other potentially competing offering. And this works really well for companies that want to maintain this investor integrity. They want to maintain, like, for their own fans, their own users, their own subscribers, their own communities, right? So it's an interesting solution to be able to have your own independent page that's not necessarily connected to others, especially if you're at the end of the day the one who's responsible for promoting and marketing your offering. Steering them to your own page could be beneficial for some, but you certainly give up the benefit of listing on a company like Republic or Start Engine or WeFunder, where you have 500,000 eyeballs who potentially might see your offering and find interest in it. One trend that we're seeing a lot of at Dalmore are something called series issuers. And it's in the page, it's in the news all the time. There's in New York Times and Washington Post, I think yesterday, and because it's connected to non-fungible tokens. It's the collectible market, right? So a number of our these are companies like some of our clients, like Rally Road and Otis and MyRacehorse.com and Mythic Markets and a number of others, where they launch Reg A's for the full maximum offering amount, but instead of raising money just for the offering, they release a series of individual assets and allow for their investors to purchase just specific fractionalized ownership interests in those specific assets. And we're seeing that really grow more and more. Like, it feels like every week there's another few that are reaching out to us to set them up. In fact, one of our clients, My Racehorse, won the Kentucky Derby. One of their horses won the Kentucky Derby. So all of their investors these guys can't necessarily put up a $500,000 to buy a horse, but to spend $30 to buy a share of a horse, they can. That's an interesting and very quickly growing segment that we're seeing.
Wow, there's a lot there. And for those not familiar with digital assets, it's also non-fungible tokens, also known as NFTs, are becoming all the rage right now, from selling collectibles and artworks. And interestingly, Ethan, I definitely want to connect with you because we're hosting an NFT conference in about 2 weeks. We have the CEO of Super Rare and also managing director at Morgan Creek Capital, who's also speaking. So I love, to extend that to you. But yeah, we also got a question from the audience. Interestingly, we're talking about niches. Jivka, he mentioned they're looking at, so this is actually directed towards one of the panelists, but Marty, that one's actually directed towards you, but he specifically is focused for opening a platform for space, space ventures, because that is a niche that is growing. I mean, I haven't seen this many NASA logos on t-shirts since, a long time ago, but now everybody has it on their skateboard, they have it on their shirts, they have it on their sweater. But yeah, to continue that conversation, where are these niche categories going to be? What are your thoughts on this, Marty? And feel free to type it in. And another question is, do these limits apply to STOs? Anybody want to take on those questions?
Yeah, I'll take on both of those, and then I'd love to weigh in on the niche platforms, because ultimately crowdfunding, it's a marketing. It's all about marketing, and we have helped a number of niche platforms get licensed with the SEC and FINRA. That's a big part of what our firm does, and we've taken dozens of these firms through that process. And a lot of them are niche. Some of them are focused on the gaming. We've got one that's focused on sort of gaming and entertainment space. We've got others that are focusing on specific. We just recently helped with one that's marketing towards Sharia compliant, halal compliant investments, because that's an investment space that's somewhat limited. And so I think you will see these niche platforms continue to rise up. It'll be interesting to see how they can compete with the WeFunders and Republics out there that are trying to be, everything to everyone. That's, I think, will be the question. And can they drive, ultimately, can they drive eyeballs? Can they attract companies, and can they drive investors to the site? And that's something I'd love to have the marketing guys weigh in on. With regards to STOs, that'll be an interesting asset. That was a wave that I definitely rode a few years ago, and that, every day I was getting just bombarded with calls of people wanting to do an ICO and wanted to have a token, and it'll be interesting to see how that, ultimately, whether the offering is done is, whether you're creating your equity just as, keeping it on a spreadsheet, or you're doing it on a distributed ledger and you're tokenizing it, the rules would apply the same. But I think you are seeing more companies starting to tokenize their shares, using companies like Securitize and so forth that can take their cap table and put it on a distributed ledger and track it there. So I think that will be just part of the process and the evolution of these rules and the technology and so forth.
Yeah, and we have over 30 deals live today. We're working with different portals, both on their investor and issuer, both sides of the marketplace, marketing strategies. Like Martin, cryptocurrency, blockchain, was heavily involved in that space for some time, and different types of STO deals that would run on these platforms. Like Eaton, NFTs are a big part of the conversation today, and have a few campaigns in that space that are going live. Really excited about a lot of the niche focused portals everything from vegan investments to entertainment license, sports oriented raises that are living on different platforms. And as a fan of sports tech and even going to different accelerators over the past few years, that's a space that I'm seeing more and more in. Couple projects launching in the space vertical, anything that you would see as a growing category on your favorite business, entrepreneur, investing, publisher, automated retail, AI, energy is a big concept. As Brian was mentioning with retail investors, getting more education, getting more awareness of early stage investment opportunities and the potential for growth. Also, where it fits in an investor's portfolio, what percentage should be allocated in terms of high risk, but being able to allocate different things from there and having the right strategy around it, the right timelines around that strategy, I think are going to play a big role in it. We're always looking to, partner with other groups, whatever we can to make issuers more successful. So to your question earlier, Ivan, about, what I see for the next stages of the industry, I think that's going to be a big component of it, particularly as larger, holding company owned agencies, institutional groups, all different types of organizations start entering the marketplace as the awareness goes up and up and up. But I think the initial data is going to be very powerful here, whether it's audience data, speaking to different investors, whether it's different types of analytics on the behavior and different timings of when campaigns perform. I think as this becomes more and more in the public eye, to the masses on a place to be able to see long-term growth at a risk, but with very high potentials for return. Everything you see growing pre-IPO type talk will be living across these portals, and there'll be very focused audiences and groups like we saw, a few months back around GameStop, but around different types of impact investment causes that are going to show very large numbers in quick spans of time.
Jason, you work with so many projects. Are there any niche projects that you're really like, these guys are gonna really take off? Like, what are those really exciting? Because I'm sure a lot of people on this call, they want to hear the same thing. What are those next golden nuggets that are going to come out of crowdfunding, and what industries?
Sure, and I'll just touch on that quickly. If I were to only go off my gut instinct in years past, I would have been wrong plenty of times, and really try. And I'm sure you can relate to some degree, and likely most everyone on this call, I really look for the analytics to validate what the crowd is responding to the greatest degree. And I think that's been true with many of the portals as well, and speaking with them about which ones would win, which ones would not. There are predictors such as audience size, existing conversion rates, reservation or wait lists, different types of existing audience pools that can project where something can go, as well as comparables. And we're always doing deep competitor audits and due diligence when putting together plans and getting an idea of what's working where.
Yeah.
But looking at platforms, I don't know if King's Crowd's on today, but I thought I saw them in the speaker list. Looking at platforms that are showing and want to get more associated with some of the platforms from founders on this call as well. But any platform that's showing analytics of which campaigns are working today, there's something to be learned there.
What industries are you like this? These guys are going to take off. I mean, NFTs. I know everybody must have seen NFTs. I think CBS or NBC literally wrote an article on what is an NFT. Like, what is everyone seeing, and do you believe the hype? I guess this is addressing the rest of the panelists as well.
I think for me, I'm still learning to see, what the fuss is about, right? To see if there's something really behind it, and how to leverage it. So today, I don't know if it's necessarily good or bad as another fad or, so I'm still learning. So I'm open to see if anyone else has any deeper knowledge around it.
I think that the proof is going to be in secondary trading here. There could be hype, and what's the end of that hype, and who gets left holding the bag. But at the end of the day, if there is an active secondary market trading, a path to liquidity for some of the holders of these assets, which is another area that we've been very focused on, there could be price discovery. There could be bids and asks on those securities that you've acquired, right? And for Reg A, there's no lockup. You know, it's a short period of time after the offering closes, and you could make these securities available. For Reg CF, Marty, what is it, 6 months or a year? You know, so that they could be listed on an ATS and you could start selling them. So I think that's really what it's going to be about. It's going to be when there's active secondary attached to these assets, and people go through the process of buying something and listing it and actually selling it over and over again. That'll really bring some, you know, real transparency and comps into the space.
Yeah, I agree with you, Tom. I think that's key, and that's a drum I've been beating for years, is that until that secondary market develops, both for these and for Reg A offerings, and we're seeing that, right? And we're seeing more of these exchanges and secondary markets pop up. But I think until that develops, it's still going to be a slow adaptation. It's not until those people say, "Hey, I invested in X, and I, you know, got a whatever return." And once you start seeing that and your neighbors talking about that, I think you'll see a real migration towards the retail investors towards these type of investments.
Yep.
And we're seeing that as an opportunity. So we talked to a lot of the platforms, and the platforms are seeing this as a perfect opportunity to create a secondary market, almost as a continuation of the ecosystem within their platform. So I can't name any names, but I know a lot of them, that is what they're focusing on, because they know these larger investors are coming into the ecosystem.
I know Net Capital has been messing around with the secondary market, and Silicon Prairie is about to kind of unveil that as well. Just 2 cents.
Yeah, thanks for sharing. Those are the insights that we want to hear. And, you know, even to the audience behind, everybody, it's literally the people here on this panel is looking at the industry from a very, you know, inside perspective. And a lot of people are kind of looking in, trying to figure out what is happening today. So that's why. Any other comments on that point? No, let's move on. So this is, if there's any other questions, I'd love to hear from the audience. Please feel free to type it in. Let's take a look. Yeah. So it's really awesome that today, you know, we're able to get together. I almost see this as like a holiday, you know, March 15th, this big day event happened, and we just shared it together. One last point to bring up that we actually asked our community was the fact that issuers can report Reg CF investors as one investor on a cap table, and what this means for projects, because a lot of people looking into this industry are like, hey, crowdfunding is, you know, in many cases very difficult because you have so many investors coming in. What is this? What does this mean? What does this change mean? I'd love to hear from the people on the stage what their thoughts are.
I'll go ahead and then let other people chime in. I originally have been on record saying I thought this was a huge change and was pretty revolutionary. I've kind of had some pulled back my excitement about that. I do think it can potentially provide a benefit to issuers because again, they'll be able to report one shareholder on their cap table. However, they still have to basically deal with all those shareholders that do get put in this SPV. In addition to that, they're going to have to figure out a way to manage this SPV, and they have to deliver the same reports. The shareholder, the interest holders in that SPV have to receive the same type of interest as they are getting, the rest of the crowd is getting. So I think it can be a benefit, but you still have to manage that. And a lot of these issuers are reaching out to third-party transfer agents to help them manage their cap tables. And so whether they all sit in SPV or just sit on the original cap table, it might not be that big of a deal. One of the things that is a benefit is that previously there's a rule, section 12G, that says if you exceed 2,000 shareholders or 500 non-accredited shareholders or equity holders, then you have to register as a public company under the 34 Act. The amendment specifically excludes the investors that come in that SPV. So you could have, 3,000 shareholders sit in this SPV and you still wouldn't be required to register as a public company. So that's a benefit that I see, but I don't know how many of these crowdfunding raises are raising capital from 3,000 investors. Maybe with the increase to 5 million, that might be more possible.
I think, one other, I may be getting into some nuances here, but I think one other interesting aspect of this that I haven't heard, I think, anyone discussing is it's kind of supplanting the Reg D, Reg CF side-by-side offering approach we see a lot of people do. Specifically with this there's kind of a third option here, right? It's you have these kind of we'll call them the traditional or legacy offerings, right, which are just up to the 1.07. And then there are these SPV ones that are up to the 5 million. But there's a halfway point kind of between those two where you actually have to do multiple disclosure filings, and you're able to kind of usher those same kind of investors that would have otherwise fallen solely under Reg CF into that SPV offering. And then you're able to say, Bill Gates or Mark Cuban decides to invest in your company online, right? Or someone with a name perhaps that you'd want to, or some institution. And you're actually able to usher them into your kind of direct offering from the kind of primary entity, the primary issuer. So you're able to actually, there is an avenue where you're able to kind of cherry pick your investors and who goes on what cap tables. So I think, getting out of the weeds there, I think it'll be interesting to see how that affects, the Reg D market and all these Reg D offerings. Well, no, that's really it. It'll be interesting to see how the industry and the marketplace kind of, what they do with this. And I think that's kind of my blanket catch-all statement for a lot of this. The SEC's guidance for a lot of this is pretty light, and we'll just have to see what happens with regard to, enforcement, if any. Which I know we haven't really seen much of to date. And like I said, how it's going to affect Reg D filings and what companies out there that are, primarily interested in those Reg D offerings or what were the kind of the traditional side-by-sides. If that also holds the lure now in the CF market, and if we'll see that influx from companies as well, from that angle, I should say.
Yeah, I think James brings up a great point there, and looking to see accredited investor, the new caps around it, where before it was 107K across all deals at the top of the accredited investor pool on Reg CF. I could tell you from the marketing side, being able to have accredited investor dollars go into these Reg CF rounds is going to be a big deal. And instead of having that side by side, as James was mentioning there, to be able to showcase all of that momentum on one offering, on one page, speaks very loudly. Social proof is very impactful, very powerful for these landing pages, for these offering pages. If $1 million is living somewhere else as part of a different filing with preferred terms, or if it's being at the forefront displayed on this offering page, it's going to be reflected in conversion rates, in cold audience traffic, whether it's accredited or retail going through an offering. It's just going to speak that much louder. It's going to give that line around the block type of feel with how much has been raised, how much that deal is validated to an extent. So excited to see what the impact of that looks like in the coming months as well.
We've seen a lot of that actually on the Reg A side recently. Originally, a couple of years ago, there was always a concern that, hey, if you're doing a Reg A or a CF, your valuation is going to be ridiculously high. It's going to be more towards the smaller mom and pop type investor that's going to put $500 on the credit card, who might not even understand valuation. That's where it was. And where it's going now is toward, and as a result, if you wanted to raise more significant capital, you would do a parallel Reg D, like you had mentioned, Joe, and that would be more suitable towards the more sophisticated or institutional investor marketplace. Well, so you have two doors in, two different structures in, right, to the same company per se. It's not a real healthy way to approach it, because the little guys getting the short end of the stick in that way. We're seeing a trend, at least in the Reg A, and I think that with 5 million on CF is going to increase CF as well, where issuers are bringing in sophisticated capital and the unaccredited, smaller type investor into this same offering. We saw that. A great example is Gage Cannabis. Gage was one of our clients. It was a record breaker for our firm. They raised $50 million in under 3 months, right? And over $20 million came from institutional capital at the same terms as the non-accredited investors. So, Jason, to your point, there's nothing better from a marketing perspective than for folks to see a jump or a press release, right, of a $20 million commitment out of a $50 million offering with smart money, right? Where it's okay, if it was good enough for them and they put in real money and they've done other big cannabis related deals, that's another sign for me to be more comfortable per se, right? So I think that's what you're going to see more. Darren Marble at Crush Capital, I don't know if you guys know Darren, launched the Going Public series, which is all about really that final stage in democratization, which allows for the average investor to get in pre-IPO, right? It's the same idea. It's bringing institutions and the non-accredited, I don't like to say unsophisticated. I think everyone's sophisticated, but that's what it's referred to. Let's call them the average guys like us, to co-invest with the institutions. That's really the point of this, right? It's to level the playing field, not to have two separate offerings. Not that anything's wrong with doing two separate offerings. And people do it, but ultimately, I think that with the higher now Reg A going to 75 and Reg CF going to 5, it really gives you that opportunity to avoid having to go that path of having two separate offerings. Come up with a valuation that is fair, that you could defend, and open up the doors to your fans, your followers, your users, your subscribers, and also the institutions into one offering. I think that's a trend we're going to see continue.